Hello! In this video we will show you how to use Bollinger Bands as a technical indicator. Bollinger Bands are based primarily on a moving average, but show a channel above and below that moving average, the height of which is not fixed but determined by the current volatility. Let's have a look at an example in MetaTrader. I'll open a currency pair on the daily time frame and I'll drag across the Bollinger Bands technical indicator onto our chart from the indicators list. Here we are presented with the parameters. The usual setup for Bollinger Bands is to use a 20-period simple moving average as the middle line and plot top and bottom lines 2 standard deviations away from it. As normal, we'll apply this to the close prices of each bar, so we'll just click OK for the default parameters. As we mentioned before, the middle line of the Bollinger Bands is a simple moving average, and then in this case the other 2 lines are plotted 2 standard deviations away. Since standard deviation is a measure of volatility, then the Bollinger Bands adjust themselves according to the current market volatility. When the markets become more volatile, the bands widen, and during less volatile times, they contract. So the bands were designed to gauge whether prices are high or low on a relative basis using volatility. So the bands were designed to gauge whether prices are high or low on a relative basis compared with volatility. The interpretation of the Bollinger Bands is based on the fact that the prices tend to remain in between the top and the bottom line of the bands regardless of the current volatility. Therefore, there are a number of signals that can be taken from the Bollinger Bands. For example, when the band contracts drastically, the signal is that volatility is lower and thus likely to expand in the near future. So as we can see here, abrupt changes in the prices can often happen after the band has contracted like this. Also, if prices break through a band, a continuation of the current trend is to be expected. An additional signal is a succession of 2 top formations, one outside the band followed by one inside. If it occurs above the band, it is a selling signal. When it occurs below the band, it is a buy signal. Finally, it is often the case that a price movement that started from one of the band's lines will reach the opposite one. This observation is obviously useful for forecasting exit strategies as well. Okay, thanks for watching. Please take a look at the other videos in this series where we'll cover some of the other technical indicators.